Most people think AI stock picking is some kind of black magic, but it's not. In fact, you can understand exactly how AI does it and even start doing it yourself. Today, I'm going to break down how AI actually predicts stocks, the data it uses, and how you can use the same approach to level up your own investing. Let's dive in. Welcome back to Alpha Index, where we decode markets, technology, and investing strategies to help you get ahead. If you're serious about understanding where money is flowing and why, you're in the right place. A lot of people imagine AI as some futuristic robot that just spits out winning trades. The truth is much less mystical, but much more powerful. AI doesn't know the future. It recognizes patterns. Just like you might notice that gas prices usually drop after summer, AI notices thousands of patterns humans would never spot, and it does it at lightning speed. So, how does it actually work? Most AI models for stocks fall into three categories. First, machine learning models. These are like really smart statistics on steroids. They look at huge amounts of data, prices, volume, earnings, even interest rates, and try to predict where a stock might go next based on what's happened before. Second, sentiment analysis models. This is where AI gets creative. It scans news articles, earnings calls, social media, and even Reddit threads to figure out the mood of investors. If everyone's talking positively about a company, that can move the stock before the earnings report even hits. And third, deep learning models. These are the most advanced. They work a bit like the human brain, layering information over and over until they spot a signal, for example, predicting which stocks will benefit if oil prices suddenly rise. Here's the secret. AI is only as good as the data you feed it. Big hedge funds feed their models a buffet of data sources, historical stock prices going back decades, company earnings reports and SEC filings, global news headlines, supply chain and shipping data, social media chatter, even satellite images counting cars in Walmart parking lots to predict quarterly sales. But you don't need millions of dollars to get started. Retail investors can use free and affordable tools like Yahoo Finance for price data, Google Trends for sentiment, and APIs like Alpha Vantage to build basic machine learning models. You can start small and still learn what the pros are doing. Let's make this practical. Here's a simple way to mimic AI-driven stock analysis. Step 1. Choose your universe. Pick a set of stocks you want to track. Maybe the S&P 500 or just your favorite sector. Step 2. Collect data. Use free sites to gather price history, earnings dates, and news headlines. Step 3. Track sentiment. Watch social media trends, Reddit forums, and Google search volume. If searches for a company suddenly spike, that's a clue something is happening. Step 4. Spot patterns. Look for repeating setups. Does the stock usually rise before earnings? Does it fall after the CEO speaks? This is exactly what AI does, just at a bigger scale. Step 5. Test your ideas before you put real money on the line. Paper trade. Track what would have happened if you followed your signal without risking cash. The true edge of AI isn't that it knows the future, it's that it never gets tired. It can watch thousands of data points 24/7 without emotion. That's the part you can copy. Build your own simple systems, stick to your rules, and don't let emotions push you into bad trades. Combine that discipline with data, and you're already ahead of most retail investors. So now you know AI stock picking isn't magic. It's data, math, and a little creativity. And the best part? You can start applying the same methods right now with the tools you already have. If you found this breakdown useful, give this video a like so more people can find it. Share it with a friend who's curious about investing, and subscribe to Alpha Index so you don't miss the next deep dive into how technology is shaping the markets. Thanks for watching, and I'll see you in the next one.